This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Okay, we're going to go through question 1 from the paper F5 2012 exam. So make sure you've got the question in front of you. If you haven't, then you better pause this and print it out from the ACCA website. However, let's have a look at the requirements. Part A, calculate the weighted average contribution to sales ratio for our company, 6 marks. Part B, calculate the total break-even sales revenue, 2 marks, so not much required there. Part C, using graph paper provided, draw the multi-product profit volume chart, a total of 9 marks. And D, briefly comment on your findings. Well, obviously it is going to be very brief, there's only 3 marks there. Well, it should be immediately obvious that this is a question on cost, volume, profit analysis. It's the first time the examiner's asked it since it was brought into the syllabus, and it does look fairly conventional. She wrote an article on it about a year ago in the Student Accountant, and it's something you should have studied and be prepared for. However, let's have a go. Part A wants the weighted average contribution to sales ratio, and if you look back at the body of the question, it says we make 3 types of goods: curlers, straightening irons, dryers. We're given the selling price and the sales volume for each of them. There's something about new technology, added 10% to next year's sales, fine. But the standard cost card, we're given the costs for each. Well, the CS ratio, the contribution to sales ratio, there are actually 2 ways you could get the figure, doesn't matter which way you did it. But I think the easiest way is to work out what is the total sales revenue first of all, and what is the total contribution. Well, before I do it, we do know the selling price obviously per unit. We need to know the contribution per unit, so let's work those out. Contribution per unit, CSD. The selling price, per unit, 110, 160, 120. The contribution, well, I should have checked, but I hope you do remember, the contribution is the selling price less the variable costs. So let's look at the cost card. Materials 1 and 2, they are obviously variable. The labour, well, it says below the table, both skilled and unskilled are variable. So all those costs listed in that little table are variable. So what's the total for C? 20, 36, what is this? 50? Which means the contribution per unit for C is $60. For S, the costs 28, 50, 84, 104. Contribution therefore 56. And D, 16, 42, 64, 72, 92, 6, 12, yep, which is what? 28 per unit. Now I know the contribution, we can work out in total what the total sales revenue is going to be and the total contribution. So let's hope I can get my arithmetic right. Product C, we're making 20,000 units, so the revenue at 110 a unit is what? 20,000, 110 is 2.2 million. The contribution, 20,000 units again, but at $60, is 1.2 million. Got to be careful with my zeros here. Similarly, S rather is next. S, 22,000 units at revenue of 160 is 3520, and the contribution 22,000 units at 56 is 1232. And finally D, volume 26,000 units, the revenue at 120 3120, the contribution 26,000 at 28, 728,000. So the total revenue £8.84 million. The total contribution £3,160 million. I think my arithmetic's right, but as long as your working's neat, even if there is an arithmetic mistake, as long as it's clear what you're doing, you'll get most of the marks. But now we can write down the CS ratio itself. Exactly what it says, the ratio of contribution to sales which is 35.7. Note it says round all workings to 2 decimal places, so to 2 decimal places 35.75%. So that's not too bad. We've not got our half marks yet, but 6 marks there, which, provided you learnt what CS ratio is and basically how we calculate it, that shouldn't have been too bad. Part B, the break-even sales revenue. Well, again, something you should have learnt, and if you haven't, go to the lectures on the website, because this is a very, very easy 2 marks. For break-even, the contribution must be equal to the fixed overheads, which we're given as 640,000. Break-even being when we make 0 profit, 0 loss. So contribution must be 640. And since we know the ratio of contribution to sales, if we know we want a contribution of 640, we can work out immediately what the sales will be. Well, I'll say I'm not going to give a lecture on it here. It's something you must learn. It's equal to the fixed costs divided by the CS ratio. And you get 1, maybe 2 marks just for having written that down. But the sticking the figures in isn't difficult. The fixed cost is 640,000. The CS ratio 35.75 or 0.3575, which means to break even $17902. It says all workings to decimal places, so I better carry on 1790209.79. So far so good. 2 marks. We got 8 in total. We've nearly got our pass marks. Part C. Well, again, very, very standard. If you haven't learnt this, then go back to your textbooks, go back to our notes. We're asked to draw a multi-product profit volume chart. Assuming 1, you're able to sell the products in the order of the ones with the highest ranking contribution to sales ratio, and 2, if you sell the products in a constant mix. Well, as I said, this is very, very standard. First of all, we need to work out the CS ratio for each product individually. CS and D. Well, we've got our workings above. For product C, we know the contribution is 60 and the selling price 110 per unit. So the ratio is 54.55%. Similarly, product S, per unit, contribution 56, revenue 160. %. And finally for D, 28 contribution, 120 revenue. %. Well, it says for part 1 we're going to sell them in the order of CS ratios, and so the highest first, C will be first, S will be second, as it turns out D will be third. Well, before we can draw the chart on the graph paper, we need to set up a little table in some form or another. Now, how you set up your table is your choice, but I think the easiest, we're going to work through them one by one, selling C first and then S and then D, and let's work out as we go along what our total revenue is and our total profit. And the way we do it is this. We say, first of all, if we sell nothing, clearly we've no revenue, with no contribution, but remember we will have the fixed overheads, so our profit will actually be a loss of 640,000. But that's if we sell nothing. As we start selling units, the fixed costs will stay at 640, but we'll gradually start earning a contribution, and so the profit, the loss will get lower, and hopefully we'll start making a profit. So let's work through it. C was the best, so we'll sell C. We're going to sell 20, or how many units was it? 20,000 units of C. And by the time we sell 20,000, the revenue at 110, I worked out earlier, but rather than waste time winding back, the revenue would go up to 2.2 million. We'll get a contribution. Now, I haven't left much room for my workings, but the contribution from C is 60 a unit. So the contribution we'll earn, 20,000 at 60, is 1.2 million. But remember, that's the contribution, the profit before fixed costs. There are fixed costs of 640, so 1.2 million contribution less the fixed costs of 640. It'll take our profit up to 560,000. So all I've done, the profit was minus 640, I've added on the 1.2 million, so the profit is now 560. Well, that's if we make C first, but having made C, we'll now go to S and get more revenue, we'll get more profit. S, we're selling 22,000. And so the extra revenue at 160 a unit is 3520. It takes our total revenue up to 5720. we'll get more contribution. Fixed costs won't change, but we'll get more contribution, therefore more profit. Well, the contribution was 56 a unit. So we'll get an extra 1232. And it'll mean that once we've sold 22,000 of S, alright, revenue's gone up to 5.72 million. The profit will have gone up to 1792. And now we go to the next one. When we've sold all the S's, then we go to D, which was the lowest CS ratio. D, 26,000. The revenue at 120. Brings the total revenue up to 8840. And finally the contribution at 28. We get extra contribution 728, and because fixed overheads don't change, we'll get extra profit of that much. It brings the total profit up to 2520. Now, before I go any further, we have a little check on my arithmetic, even with a mistake, it's clear what I'm doing, I get most of the marks. We had worked out earlier, when we sell all of them, total revenue, 8840, it checks. The total contribution was 3160, but the profit, 3160 minus the fixed overheads of 640 is 2520, so it does check. However, we needed that table, but they want us to show it on a multi-product profit volume chart. Now here, you're going to have to forgive me. On this machine, I can't actually use graph paper, so I'm not going to draw an accurate graph. But let me go through how we would draw it. The profit volume chart, we're going to be showing how the profit changes with the revenue. So with two axes, oh dear, it's not very pretty, but I hope you take my point. I'm just trying to show how we would draw it. On this axis, we'll show the profit. On this axis, we'll show the revenue. And do make sure you label things nicely and you draw it prettily. There will be marks for that alone. This is no revenue. We need to set scales. And we've got to make sure that first of all the revenue goes up to 8.84 million. I'll have it go a bit more. I'll have the revenue go up to 9 million. So let's do it. As far as the profit's concerned, we've got to show the profit's got to go between minus 640 and plus 2520. So if there is 640,000 loss, actually that's not going to quite work. It'd be easier obviously with graph paper, but 2520, I'll start with that one. If I'll put 2.50 there. So 1 million, that's 2.5 million. 2 million is going to be about there. 1 million is going to be about here. And minus 640, well, minus a million would be there. Minus 500 there. I think you can see what I'm doing. More importantly though, the way we draw it for part 1, we say we go at each level. So when we sold 0, we had 0 revenue and a profit of minus 640. So 0 revenue, profit minus 640s, let's say about there. Then we sold S. It took the revenue up to 2.2 million. Up there. And the profit up to 560,000. So it's about there. And we draw a line on the basis that while we're selling product, what was it, product C, every extra unit is giving us an extra $60 profit. So it rises linearly up to that point there. Right, we've got to that point, then we start selling S, and S takes the total revenue up to 3.52 million. 4, 5, about there. And it takes the contribution up to 1.792, which is about here. Oops. So that is S. And finally we then sell D. Takes total revenue up to 8.84, which is about there. And the total profit up to 2.52. So there. Now I'll say, I must apologise, it's not very pretty. It's not terribly accurate because I've not got graph paper. But I hope the idea of that makes sense. But that's part 1. Part 2, and they only want the one graph, it says if we sell them in a constant mix. Well, again, I'm not trying to give a full lecture here, but the way we've done it is we make C first of all, and then we make S, then we make D. But if we were always selling in a constant mix, then it'd go from 0 again straight up to there. It would look like that. So, make sure you can draw a pretty graph. I'm not going to carry on apologising. But the main bit is getting that table. Again, if you need more on it, look at the lecture on the website. But otherwise, it really is just speed and then drawing a pretty graph. Finally, part D, it's only 3 marks, but even so, you could have got, well, you get these 3 marks in full even if your graph was completely wrong because your arithmetic in the table was wrong. I'm surprised it was only 3 marks actually, but for 3 marks, clearly she's not wanting much. And the point should be after this. First of all, if the sales are made, if the products are sold, in a constant ratio, so even if we only had half the volume, it would be half the volume of all of them, then it would be that line, the last line we drew where I've written constant mix, and break even would be at this point here. I'll label it, then break even revenue at point A. And of course we have worked that out. We've worked that out in part A of the question. Part B, it was 1.79 million. My graph isn't accurate, but even so, it's somewhere in that region, point A. Secondly, though, we could break even sooner by selling C first, the one with the high CS ratio. So we can break even sooner, earlier, by selling, which one was it? Product C first. in this case, break-even revenue would be at point, well, again, I'll label it to be that point there for zero profit at point B. Now, she didn't actually expect you to do arithmetic on this, but it's actually rather quick, because we already know the CS ratio for product C. It was 54.55%. And so break-even revenue, as always, is the fixed costs divided by the CS ratio. 640,000. I've forgotten what I just checked. What was it? 54.55. Which is 1.17 million. I'm not going to be precise. Now, I say she didn't actually expect you to do the numbers, so there's no point wasting time on it. But because if you understand what's happening, because of everything we've done, that's actually very quick, so it would be nice to write it down. But we can achieve break even with lower revenue, provided we sell C first. Well, that's got me 2 marks. The final point, though, is this really realistic? You know, we're budgeting on selling 20, 22, 26. If the budget's right, then what we've done is fairly irrelevant. We know what the revenue would be. We know what the profit would be. End of story. But the whole point about this is because the budget figures could be wrong. If we sell more, great, we make more profit, but if we sell less, we'll still make profit, but lower profit, unless we're below break even, in which case we lose money. And we've said, okay, if we sell less but it's in a constant ratio, we break even at point A. If we sell less but it's C first, we break even at point B. But surely it's not necessarily up to us to determine. If sales don't hit the budget figures, sales could be anything. It depends what customers demand. They might demand 1,000 C's and 5,000 S's and so on. We've only looked at 2 possibilities: that we sell in a constant ratio, or that we sell in that order C, S and D. And so you do need to make that point, that in practice the actual sales volumes will depend on demand, and are unlikely to be in a constant ratio or to be C first. Okay, so that's more than enough for the 3 marks. And do make sure you've written something for each bit, because alright, there are lots of places you may have made a silly mistake. Silly mistakes don't lose many marks, provided it's clear what you're doing, so lay it out nicely. Secondly, they don't follow mistakes through, so if you've made a mistake in part A and got that wrong, clearly you'll have got part B wrong, but you'd still get full marks for part B, provided you'd made it clear what you were doing. Similarly, part C, if those figures are wrong, obviously the graph's wrong, but provided you've drawn it properly on your figures, you'll get most of the marks. And part D, well, okay, it is only 3 marks, but there are actually 3 easy marks if you understand. Because, now I can't believe this would happen, but even if you got completely messed up on A, B and C, you should have known what the graph basically looks like. And you don't actually need any numbers for part D. That part D there is fairly standard. There's no excuse really for not getting those 3. Okay, well, that's it.